There was a huge people element to this. And if you go into it thinking this is purely transactional, it's just cash moving from one person to the other, you're going to be pretty shocked.
Welcome to Season 2 of the Founder Funded podcast, a podcast for searchers by search experts where we explore the route to business ownership without having that $1 million idea. I'm your host, Carl Lundberg, CEO at Gerald Edelman and founder of the ETA Awards. Let's get into it. What can I do to rock the boat?
Absolutely, yeah. It almost felt too stable. If people walk away from this deal, particularly in acquisition, feeling like somebody's lost, then that's not going to be a good partnership.
Today I am joined by Toby Henry, who is the CEO at Accelerator Solutions. Toby, great to have you here.
Yeah, great. Thanks for having me. It
would be brilliant if you could just perhaps start with telling us a little bit about your background before the world of search.
Yeah, sure. So for 10 years, I was a management consultant. So I graduated bang slap in the middle of the 2008 financial crisis, which was fantastic. So finished university, finished my master's and thought, what do I do now? Landed into financial services very fortuitously. Spent 2 years at HSBC, kind of learning the ropes of how businesses work, learned a lot about project management, and that was something that I decided that I wanted to do. Moved into management consultancy and spent 7 really great years at a company called Capco. Ended up moving to New York for 4 years, building out their digital transformation practice. Spent a lot of time doing big transformation programs, change programs, and helped build out that practice up in New York. We had our first child out in New York, and then decided to move back home. And then spent another couple of years in consulting, got towards kind of the partner level, and then I got to the point where I was spending a lot of time writing PowerPoint decks for execs and CEOs, and wasn't doing any of the work anymore, and I felt quite disconnected from that. So I got an opportunity to go work in a SaaS scale-up called 10X. So it's the platform behind JP Morgan Chase's Chase Bank, which is doing fantastically well at the moment. So spent 3 years there. I don't think I've learned so much in my entire career, and I really got that thirst back for being challenged and doing something different and learning. I'm a big kind of fan of just learning and continuous learning. Spent 3 great years there, and then got an opportunity to go to another scale-up called InvestCloud, where I spent the last 2 years running their global client success and implementations. And during that period of time, had a few life events happen with the family, and felt like I'd always had this urge to want to do something on my own. Both my parents were entrepreneurs. My dad founded his own business and then had a successful exit. My mum came to entrepreneurship later in her life, in her early 50s, and actually just was awarded an OBE on Monday.
Oh, wow.
For the volunteer and charity services that she does in Yorkshire. So I've always had that itch of wanting to do something on my own, and felt like if I didn't do it now, I'm kind of late 30s, I'm 38, so I thought pretty stable family life, kids are at a good point at school, wife's got a good job, her career's going well, felt like it was the right time to do this. But I didn't really know what to do, because the thought of starting something from scratch, the 0 to 1 was really quite scary, and I'm not a big ideas proposition guy, but I knew I had the skill set to do something on my own and be successful doing it. And I kind of fell into this world of search. It was quite like a serendipitous moment where I had an interaction with someone and a light bulb went off, and I thought, actually, that's the thing I've been looking for.
Yeah, amazing. Wow. I can completely understand that. This kind of how I felt when I first figured out this is doable. There's lots of interesting things there, actually, that you mentioned. There's this theme, perhaps we'll get onto it later, of kind of I feel like entrepreneurship runs in the blood.
Yeah.
Often I hear that, people's parents were entrepreneurs. So that's really interesting. Also, you like learning. And what I actually described search as yesterday to someone, I was having a conversation. I said, they're so knowledge hungry.
Yeah.
I think it's probably the primary characteristic that I see across people who do search. The other thing that I thought was quite interesting is, you just got to a point where, stable family life and everything. You thought, right, what can I do to rock the boat?
Absolutely, yeah. It almost felt too stable when you're the same. You've got young kids. You go through that period of just instability generally, and you're learning as a parent, and then you get out the other side, and the kids are sleeping, being able to dress themselves, and it all feels a little bit calmer again. You get your sleep back, and then I thought, what can I do just to
make
mix
life
this
a
up
little bit more hard.
Absolutely, yeah.
That's it. And so you bought a business and we had another child.
Yeah, exactly, yeah.
Yeah, quite, okay. Good. And so how did you hear about ETA? So you were kind of here thinking, right, what's next? And yeah, what part of the community kind of got you in, first of all?
So it was a very strange interaction. So a gentleman called Amir, who actually raised the traditional partnered search fund, we've known each other for a little while. I saw that he'd quit his job, and he had a very kind of prestigious job at a scale-up called Callsign. He was a COO there and he was doing fantastically well. And I saw that he'd left, and he looked like he'd set up his own fund, and I didn't really understand what he'd done. So I sent him a message and said, "Congratulations, I'm a bit confused. Basically, what have you done?" So he was and this is another thing I find about the search community in general. Everyone is so generous with their time and happy to tell you the things that they did, the pitfalls that they went through, the learning experiences to try and accelerate somebody else's, but in a very genuine way. So he hopped on the phone with me for 45 minutes, talked me through what a search fund was, talked me through how he'd gone about the process, why he'd done it, why he'd gone down a partner route, and then sent me a load of stuff, the Stanford Business Review stuff, and he sent me to the Walker Diebold Buy Then Build book and the Harvard Small Business Review. So I spent basically 2 days just consuming that, and then going backwards and forwards a little bit over text message. And as I remember saying to my wife, I think this is the thing that I didn't know about that is the unlock, because I don't have to have a big idea. I don't have to start a business from scratch and have the risk. Although there are risk trade-offs in doing this, obviously, it meant that I could quite quickly find something, run the business, but not have to take that 0 to 1 risk, which was really appealing for me, because I felt like I had the skill set to do that, but not necessarily the idea to kind of jump me off.
That's it. I think there's probably so many founders out there who want to be entrepreneurs and think, well, I need to come up with an idea. And it's not the other way around. It's not like, I've got an idea, we need to build this. It's kind of, well, I want to do that, let me come up with something that's kind of passable and go and raise some money. And so that's the beauty of this, right? And so what was your kind of position at that time? You were still working full time?
I was working full time. And one thing he said to me, he'd basically stopped working and then done the traditional search and raised that traditional fund and had an 18-month runway with his partner to go find a business, which they have done and doing extremely well at. And that was the idea. The initial idea was to raise a traditional search fund.
Yep.
And as I started to go through that process of investor decks and pitches and thesis, I was spending lots and lots of time, really in hindsight, procrastinating. And then I found out about self-funded search. And again, that was another slightly different unlock for me, where I thought, actually going and raising lots of capital to buy quite a big business in size to make it financially viable for an investor probably wasn't the thing that I wanted to do. Again, given this is the first time I'm doing this, probably wanted to come down a little bit in terms of the size of the business that I was looking to acquire. And when I realized that, I actually accelerated my search journey very quickly, because I had a very clear view because I had to write that investment thesis about the type of company that I wanted to buy, the size, the dynamic, the non-negotiables for me. And then when I went into that self-funded journey, I then very quickly kind of found a number of businesses that I was interested in. And what I'd found was, because in my mind, I'd almost said, I'm going to quit my job and do this full time, and I put a lot of legwork in up front, I actually was able to keep my job through the whole time of doing the search.
Amazing.
I've had a few people ask me how I ended up doing that, and a lot of it was just around the discipline and the drive to want to do it. I could see a very clear carrot at the end of the stick, and it just meant that, when the kids went to bed, I spent a couple of hours trawling through broker websites or talking to brokers or looking at deals and putting them through my model, and spending Sunday afternoons and just carving out a couple of hours over a strong coffee and really trying to get through that. I felt like that was the right thing for me to do. I'm not necessarily saying that's the right thing for everyone, but that worked for me in my kind of personal circumstance. And it meant that, I think we went from starting the journey to the acquisition itself in about 6 or 7 months. So I think pretty quick.
Yeah.
But I think a lot of the initial thought and legwork really went in before I even started the journey itself properly.
So that time you spent when you were kind of thinking about, am I going to go down the traditional route, actually was time well spent, because it meant that you had a bit of a head start, and you knew what you wanted by that point.
Yeah, exactly.
Yeah, great. Okay, and so it took you 7 months, and what you mentioned brokers, right? Yeah. So was it purely, I guess, when you're doing it kind of in small chunks of hours that you're kind of carving out of your everyday life. I assume that's kind of the only approach. Was there any proprietary outreach, or was it just brokered?
It was just brokered, and I made the decision quite early that I was going to go down the brokered route, and partly because of that is I'd spoken to a few people who were in the middle of proprietary searches, and that does take a lot of time, physical time, to go and find the businesses, the research side of things, understanding the businesses, initial diligence on what they look like. You don't get as much of the information. And I felt like if I'd have gone down that path, the research and that type of thing is not really a particular strong suit of mine.
Yep.
So I made the decision that if I was going to do this, that I would want to find a broker or brokers that were smaller, that, not the big ones that people know about. Won't mention any names. But so I went down the brokered route. I used a couple of sites, kind of more at the high end of things, so Deal Suite, that were getting, not proprietary deal flow, but deal flow from probably a higher quality of someone looking to sell their businesses, which was really helpful because it meant that I could use that as a filtering tool. And because I had already written the thesis, I kind of knew the sector. I was always going to look in services because that's my background.
Yep.
I didn't want to look in anything too asset heavy or from a product manufacturing perspective, just because I felt like the learning curve would be too high. So there were a couple of the big things that I put in place quite early. In hindsight, might have made a different decision, but I was going with the information I had, and based on my experience of running services businesses and services business units, it felt like the right thing to do. Understood the business model, understood how cash flowed into the business, understood how you win new business. So that kind of made sense. And once I'd made that decision, it made the funnel of looking at the businesses slightly different and slightly easier, I think.
Yeah. I think there is you've probably read it, the Search Investment Group self-funded search study. Did you read that? And that I don't think it's necessarily linear, but certainly more narrow searches yield faster results, and certainly that's sort of rings true in this case. Because I suppose it first of all, it's easier to get a benchmark, right? Because you're looking at similar businesses. And I suppose also what you're looking for, right? It's narrow. There's only so many you're going to look for. Now, of course, there's the risk that in that population there isn't a business that is suitable for you. But if there is, great. So okay, brilliant. And so you found Accelerator Solutions. Tell me about how you found that and what the kind of initial approach process was like.
Sure. So I found them through one of the websites I just mentioned, and then got put in contact with the broker. Small broker company, had an initial conversation with him. He seemed like a very credible guy. He knew the business really well, which I think was quite important to me because he was able to give me a lot of information, and actually he was vetting me as much as I was vetting him or the business, but in a very credible and genuine way. I had a few horrific instances with some brokers where they would say straight away, show me basically your bank account. And I'm like, well, we're not even, we haven't even swiped left yet. We're just kind of not even dating. And that put me off a little bit, whereas the broker on this side was just more genuine, asked me what my intention was, asked me, my background, experience, and that went well. And then very quickly met the two founders, Heidi and Henry, who'd been running the business for 25 years. Met with them on a Zoom meeting quite quickly and had a good rapport and relationship. Felt like they gave me a good amount of context. They were very open and genuine, which was really important to me from a partnership perspective. And then I went away and kind of did some of the modeling and see if it would work and how I would fund the deal and that type of thing. And then once I'd got comfortable with that aspect, we then met in person for the first time, which was really nice, and then had a very open conversation about what my intentions were, what I was looking to get out of the deal, what I was looking to get out of running and growing Accelerator Solutions, and then what their role would potentially look like. So all those things were very aligned from the start, which was really helpful. And then once we kind of went through that process and then went into LOI and the deal structure, things progressed pretty quickly off the back of that.
I've got a few follow-up questions on that, actually. But first of all, you mentioned the broker, and actually the way the broker approached it was look, it's important for the sell side of advisor or broker to make sure that the buyer is credible and capable of buying the business, because ultimately they don't want to waste anyone's time.
Yeah, sure.
But you're right that it's appropriate to do it in the right way. It's frustrating that still we have brokers out there who will come across an individual who wants to buy a business and say, well, you can't buy it unless you've got £6 million in the bank. Well, that's not the case, is it? And I think when you've got a traditional search fund, it helps because you can say, well, I have got this incumbent group of investors and, here's evidence that they have committed some money already. But self-funded's even more difficult. So it sounds like they were better than some there, but how was the sellers' valuation expectations? Had they been realistic with them on that side as well?
Yeah, they had, and that was one of the bits of advice that I got, and some of the other companies that I spoke to, their valuation expectations were just so misaligned with nothing behind them. Even before you got into due diligence and actually looked at the kind of the financials, it was obvious that it was just not going to work. So it was a very reasonable valuation multiple, and because they've been around for 25 years, there was longevity in that as well. And they've ridden a number of downturns and recessions, and that was really important to me because in the space that we're in, it's very easy to pop up and offer something, but then those companies tend to die away quite quickly. So that longevity was really important, and the valuation worked, and there was a good alignment off the back of that. I think if they hadn't have been, and they were very open from the start about what they were looking for from a valuation perspective, so it wasn't hidden behind like a subject to offer type thing. So that was much easier to then meet in the middle or have a proper negotiation about it, which was really helpful because it probably cut through a lot of the we're very British and we're very proper, and sometimes we don't want to ask the awkward question. But it cut through a lot of that, which was really helpful. Yeah,
definitely. I think I find these things so much more simple when everyone's transparent. I'm quite a upfront individual anyway, and not everyone is, and I think it perhaps sometimes can come across in the wrong way. But it's easier when everyone just says, look, this is where I am. Because then you can say, well, fine, actually, I understand that. I'd love to get there, but I can't, and this is where I can get to. And then, there's a gap, and you kind of do what you can to find a solution, whether that's timing of payments or increasing the price to some extent or whatever. And
I think I've done quite a lot of deal negotiation in my history and contracting. And it's always about, to me, the best deals that I've done, some large deals, they're about partnership. They're about no one really losing. If people walk away from this deal, particularly in acquisition, feeling like somebody's lost, then that's not going to be a good partnership, particularly if there are deferred payments or the people are staying in the business, which is the case in my acquisition. So it always felt like we had to both be winning. And we talked a lot about that from a deal principles perspective when we first started, that these are the things that we're going to focus on. And if we deviate away from this, then we call and say, and we pick up the phone. That was another thing we said, like, if there is a problem, just pick up the phone, because email and text messages, particularly via lawyers or brokers, can get a bit agitated. So we said, just pick up the phone, and then if it needs to get litigious or if we need to go and renegotiate deal terms, then that's the outcome. But let's just pick up the phone and have a conversation about it.
Yeah, got it. On the win-win point, actually, I remember when we first started the ETA Awards, and I was talking to people about kind of deal of the year or, investor of the year. And I think there was some reluctance for people to accept awards for, doing a great deal. And then we kind of had to explain that what we mean by a good deal isn't you've had a great deal, which means the seller's had a terrible deal. It means that it was a good deal for everyone. There has to be a mutual enjoyment and a win-win situation, because that is a good deal. It is. You're absolutely right that it's not a good deal for one person to walk away thinking they've won and another one thinking they've lost, because unless it's a completely isolated transaction that ends there and then, there's going to be resentment and there's going to be issues down the line. And ultimately, that's not a good deal.
Yeah, and whether the people are staying in the business or not, I think one of the risks associated with this is that there's a huge people, unless you're literally buying a factory with no people in it, which is not going to be the case, there's a huge people element to this. And if you go into it thinking this is purely transactional, it's just cash moving from one person to the other, you're going to be pretty shocked. And not just the people you're doing the deal with, but they've got teams of people who may not be even aware. Like in my situation, the team and the rest of the company weren't aware, apart from one person, that there was an acquisition happening. So in a people-based business, can be quite emotional, and it means that you've got to be very clear about the intention of why you're doing something. I got asked a few questions when I first did the acquisition. What is your intention of this business? People have been working here for 10, 15, some people 20 years. There's that sense of nervousness. And that was part of the initial process with the sellers, which was, this is our baby. We've grown this from nothing to a 7-figure business in over 25 years. What are you going to do with it?
Yeah.
And I was very open and frank about that. This is not about a sweating the asset and getting rid of people and, that type of thing. This for me was about coming in at with an accelerated, no pun intended, process where I could run a business. I've always thought I would be good at running a business and take all the foundational stuff they've put in place, which is really great, but then try and take it to the next level with a different perspective, different client base, maybe a bit more, energy and enthusiasm. Not to say they're not enthusiastic people, but they've taken it to over 25 years, and those people, it's great to be able to give them an exit as well, because they've worked super hard and they've created jobs and that type of thing. And I think that shouldn't be underestimated for these people who are looking to sell their businesses. So it was really nice that we could come to a really good middle ground from a deal perspective. And like I said, they've stayed in the business, which is great.
Yeah, that's brilliant. And I think it is, it's an important point that it wasn't just about cashing out for them.
Yeah.
And that is exactly the type of deal generally where a searcher or someone like you can win, because if you're going up purely against, if you're going up against, say, a trade buyer or PE, maybe you can't pay the highest amount, but what you can do is come in with a long-term plan, not a 5-year flip solution, as an owner manager to replace them. And look after something that they've built. And I think, when you get to a point where this, the sellers are an important motivator for them is legacy and succession, truly, then absolutely that's the perfect kind of situation where someone like you can come in and actually beat other bidders because of those intangible aspects.
Yeah, and that was the case in this scenario, actually, because I think they had a couple of other offers from trade buyers that were probably slightly higher than I was offering. But the worry, I think, was that they would just be consumed into a large business. There would be a people impact. They would lose the legacy of what they've created over 25 years. And they were really conscious of their people, which again was a good litmus test, because it meant that they were genuine in the reason why they were selling, but also very considered that there were going to be people on the other side of this that had to transition into a new, an evolution of the business. It's not a rip it up and start again thing. That would be very silly. But, being conscious of that was really important, and was important for me, having run large teams and worked in large organizations where sometimes the people element is lost and forgotten about and you're just numbers on a spreadsheet. It was really important that I acquired a business where the people aspect was also important, because that's important to me.
Yeah, got it. And you mentioned that the sellers are still involved, they're still there. Are they still equity holders? Are they just in kind of management?
Yeah. So both. So the way we structured the deal was there was an initial payout, then a deferred element over 3 years, and then they retained 5% equity each, and then they've got a put and a call option at 3 years, which they can then exercise, or I can exercise. So that was, again, that was important to me, to align incentives. And I know, talking to a number of searchers, that sometimes is quite easy, sometimes is very, very difficult, because depending on how the expectation has been set, either with a broker or just generally, from Bob down the golf club about who sold his business for 10 million, is like, it's very rare, and I don't think I've ever seen a deal in the community where someone has been cashed out on day one. And I think it was important for me that given the type of business I acquired, that they stayed in the business, both from a transition perspective, but also that we aligned incentives for growth. Because if we are collectively successful, then they've got an upside in year 2 from a payout perspective. And then obviously if they've got equity still, and then we look to, sell the business at some point, they can retain that, or there'll be multiple things that can happen between then and now. But that was really important, because one of the bigger risks in this type of kind of people-based services business is it's a relationship business as well.
Yeah.
They've got some amazing clients and fantastic relationships. And if they'd have wanted to leave straight away, that would have probably been too much risk for me to take on day one.
Yeah.
So it's really great that they've wanted to stay in the business, and they've been very aligned to the growth ambitions, but also being good partners in the genuine sense of they've checked me as well. So they've run this business for 25 years and have got previous experience before that, and some of the things about coming in as a new CEO or coming into this just generally from a search perspective, I would say to people, it's scary at times, and coming from a corporate world where you're going to get your paycheck and there's a level of stress, but that stress is either, in my world, it was always project dependent, or there was some people stresses, but you always had like a HR team there to support you.
Yeah.
One thing I've definitely learned over the last 6.5 months since the acquisition is the stress is there, but it's different. It feels more personal from a stress perspective. You've obviously got debt covenants, and you want to grow the business, and you've got aspirations, and then really important that you have people around you who can say, this is okay. Like it's completely normal, Toby, to lose a client.
Yeah.
The more important thing is, how do we then go find more clients?
Yeah.
And I think that's what they've done with me over the last 6 months, is sometimes just go, we've been doing this for 25 years. It's actually okay. You don't need to go panic.
And it's not you. This happens. This has happened in the past. It's not because, we're not running it now. No, that's great to have them there for that support. I suppose also it demonstrates their belief in you, and kind of advocates you to the rest of the team.
Yeah.
The fact that they've retained equity and they're still around, if they've disappeared off, you would perhaps question how genuine the legacy point was.
Absolutely.
And if I may go into a slightly technical point, the put and call.
Yep.
Did you agree a fixed? Was it kind of the same multiple that you paid on deal day, but with the year 3 earnings figure, or is it just market value?
It's market value based on the same mechanism that the company was valued at.
Okay.
So we used a pretty standard EBITDA multiple. So that's the mechanism.
Yeah.
And then there's also a mechanism in there from a dispute perspective, obviously. So we can use a third party independent who will then value the business based on the same mechanism at that point in time.
Got it.
And
But not a pre-agreed multiple.
Not a pre-agreed multiple.
Just saying you will apply a multiple to the suitable. Okay, fine. That was just my technical side kicking in there, just out of curiosity for myself, really. So what was it that stood out about Accelerator Solutions when you first came across it? What was it? And I know that it's the world that you've been in to some extent, and things like that. Was there anything else in terms of the numbers, the growth, or the industry?
There was a couple of things. So Accelerator Solutions, it's a training, learning, development, education and research consultancy. And there was a couple of things I liked about it when I first read the IM and then started to speak to the founders and kind of get under the skin of the business a little bit more. The first is it's a very people-based business. And the previous 2 years I had before moving into this role, I'd kind of lost that a little bit. It was just all about, working very hard, but the people element of what we were doing, I felt like I'd lost that part of who I was, and that's always been really important to me. I love the fact that they are all about helping people learn, get better, and kind of evolve. And we do a lot of work in leadership development, next generational talent development, service culture. So that aspect stood out for me quite strongly. Their client list was fantastic. So they've got amazing clients, and the longevity of the clients. Most of their clients have been with them for more than 10 years. And although it's not recurring revenue in like the SaaS sense. There's a heavy reoccurrence in the revenue and the loyalty of the clients. And having worked in client facing and client industries for a long time, that is a real sign that they've got something special, and the secret sauce both within the people they have, how they deliver it, and just the approach that they take and the frameworks that they use is really quite differentiated, which I really liked. And then also it's a industry that's in transition, and I know I'm probably a bit atypical in the sense that this is a white collar business and not a blue collar business. And I did start down that traditional service-based business in more the blue collar sense. And what I realized when I saw some of these other businesses that were more kind of traditional white collar services businesses is that I felt like, given my background, experience, reputation, and relationships, I could add something very tangible very quickly.
Yeah.
Whereas the learning curve in another business might have been slower, or I might not have been able to add as much value as I could potentially. I know the number of people who have bought more traditional search, blue collar services businesses, and they've really struggled with the people element of it.
Yes.
Going into kind of a manufacturer or going into a distributor, and understanding both the dynamics of how that works, and cash flow is always the thing that comes up and up and up in those businesses, but also dealing with the people, lots of family relationships within those businesses. The dynamic is very different, and I made a decision. Time will tell whether that was the right decision or the wrong decision to go into the more white collar space in an industry that I knew really well. And over the last 6 months, I think I've been able to bring in my relationships. We've won a couple of big clients off the back of relationships that I have, which has been really nice to kind of give yourself a bit of confidence as you move into this. So I think that was the other key element. And the third aspect was the industry generally, training, learning and development, education, is going through a big shift change. So there's a decent amount of consolidation in that space. There's an opportunity to be really differentiated in your offering. How AI plays a role in that, how you look at more in-person, high-touch people development. There's a really interesting dynamic happening where the kind of wider ecosystem is saying, AI, do something in that space, buy a really whizzy learning management system platform. But actually, maybe this is a post-COVID thing, maybe it's just where we are from the wider world perspective, is people are craving human interaction. And we're seeing that a lot from what our clients are asking us for. So Accelerator is a very high touch, tailored, bespoke training and learning and research business. And I liked that. I like that part. It doesn't mean from a growth perspective, we are looking into how we embed more technology within our business so we can have a broader offering. And I liked that about the business, that what they do really well. But there are very clear avenues for growth without changing the core business and just ripping up the foundations, because that'd be a silly thing to do. So I like that aspect of it.
I suppose that leads on to a natural next question of, what's next? And I know it's early days, and you don't want to get ahead of yourself and think, you're nowhere near done with this yet. But what's the plan?
Yeah, so there was, I think when I first came into this space, my initial idea was, and I'm sure this starts where everyone kind of starts, is you want to be a mini Berkshire Hathaway and you want to start a holding company, you want to sit at the top of that. I think what I've realized is my focus needs to be with Accelerator Solutions 100%. The growth and the success will lie within this first acquisition for me as a longer term strategy. So we've got a very clear view now about what the next 12 months looks like. We're just finalizing our 3-year vision. Some of that is around how do we augment our service line? So how do we bring in more digital AI, e-learning into our wider service offering? How do we create potential recurrence in revenue from a platform perspective? So that's a really interesting space, and I've got a lot of experience in that space. Diversifying a bit more strongly into more core consulting. So we have a lot of clients who come to us and ask us to do more traditional change management consultancy. And we have done work in that space, but given that's my background and experience, there's a nice tangential growth opportunity that we're just going to test the market with. And then we're constantly looking at, there are other acquisitions opportunities. There is consolidation happening in this space. So finding potential opportunities, I mean, that's not anything we'll probably do in the next 12 to 18 months, but as a longer term strategy from a growth perspective, that's something we're kind of constantly keeping an eye on.
Yes.
And then, we'll see where the next 3 to 5 years takes us. I don't think we have not made any decisions about what this company will be off the back of that. I'm just excited to kind of go on that journey and see what happens in the next 3 years. And if we meet our, fairly realistic growth targets in 3 years' time, there'll be another decision to make, which is then what do you do off the back of that? Do you then look to acquire more businesses and turn this into like a, 20 million pound company, or do you do something slightly different?
Yeah.
And then all those opportunities are open. So don't want to predict or preeminate that, and see what happens really over the next 12 months.
Yeah, amazing. You put some debt into the business. Yeah. What's the amortization period on that? If you're happy to.
No, yeah, fine. It's so the initial deal terms are 5 years. So I was very fortunate, and I got a few questions off the back of this doing the podcast with Paul. Was so because of the debt market, and I'm sure your listeners this will resonate. The debt market at the moment is quite difficult, particularly for businesses under a certain size, and that seems to be changing all the time as interest rates are changing. And because of the deal size this was, I had to get quite creative with the debt. So got an asset-backed loan from a wealth manager. That deal is interest only, unlimited bullet payment over 5 years with an extension to 10 years. So cheap debt in relation to what the other providers were providing.
And particularly from a cash flow perspective, because there's no amortization, right?
Yeah, exactly. Which, I mean, there's all these things come with risks, and they're just trade-offs. I have an interest payment to make every quarter, which is manageable based on the cash flow, and we modeled all that out. But then it's about then accumulating that, because there will have to be a bullet payment to pay off the debt at some point. That's not overly scary, but it's just something that's new for the business as well, because they never had debt on the business.
Yes.
So making sure everyone's aware of that, and what our break-even points are slightly different now for various reasons. So, but yeah, I was very fortunate in that sense. I don't think would have been able to do the deal if I'd have gone with a traditional lender, because I don't think the payback or the investment wouldn't have been worth it. And then I would have had to have gone up the scale in terms of business size, and I don't know if that would have been the right decision to make, just given it was my first time. But the decision I made was the decision I made, and that's kind of where we are.
Actually, it's something that we ought to have touched on earlier, is the size of the business. What sort of level of EBITDA was it doing, and how many people? And
so it's 15 full-time members of staff, and we have a flexible associate pool for our delivery, depending on how we scale, of between 10 and 15 people across our training and research teams. The EBITDA, if I kind of give you a range, was 400 to 650, so in the lower end from an EBITDA perspective. But again, because of the services type of business, the margins were very good. So again, we don't necessarily have to grow the business a huge amount to see it hit the bottom line quite quickly.
Yeah.
And that was a decision I made. I think at the moment, with debt structures the way it is, it feels like anything below 1.5 million is going to be very difficult to fund through a self-funded search.
Absolutely.
So that changes the dynamic. 1.5 million in EBITDA is a significant amount of EBITDA, and then I just felt when I was doing those lending terms, the business type I would have to acquire and the risk that was going to have in place, it just felt the wrong thing for me to do at the time. As I'm, still learning this stuff, I've got a lot of experience, and that's one thing I would definitely say for people coming into this space. You have to take the bits of your experience that unless you're going to go buy a business in something that is directly aligned, you've worked in door manufacturing, you go buy a door manufacturer, okay, cool, you're probably going to be absolutely fine. But I don't think that's necessarily what the majority of people do. Is understand there's going to be a pretty significant learning curve to this, and I suppose being uncomfortable with that uncomfortableness for a period of time.
Yeah, absolutely. I think the point about the size is interesting, because actually marginal income could, if you can deliver it from the existing team, all hit the bottom line. Actually, so there's quite a lot of but there's an element of growth that can fall straight to the bottom line before you even need to it won't be at your margin, your existing margin, it'll be higher. And of course, something this size, you mentioned the debt market, and I've talked about it lots of times on the podcast. You can't buy a business that size with debt without having some sort of other circumstances there. So actually, there is a great opportunity in businesses this size for those who can buy them to then grow it to the size where other people can buy them and hopefully get some multiple arbitrage there as well.
Yeah.
So that's really exciting as well. Okay, so we've talked about what's next. I think it'll be really useful, and I think people will there's a lot that people will take from this, is what advice would you give to someone? Because the way you've done it is really interesting. And the business you've acquired is really interesting, and I think it's going to do fantastically well. What advice would you give to someone considering doing the same, including, and it may be, don't do it if you're not the right person to do it, So
I think just go in with eyes wide open. Like I said at the start, there are lots of people preaching this is a get-rich-quick scheme. Like, it's definitely not. This is something that you have to think about carefully, make sure that there's how your Excel model will look, but I would say take it down deeper and understand what it means for you, your family, your kind of spouse or your partner, understanding what your day-to-day might look like and the pros and cons of that. I made a very conscious choice, having worked in a very stressful corporate environment for a long time where I didn't get to see my kids that much, that a big part of this was flexibility. So trading off, like, what are your non-negotiables and understanding what those things are, have to go into this. I think if it's something that you want to do, the network from a search perspective is probably the most open community that I've ever been a part of, both whether it's just the WhatsApp groups, whether it's the meetups, whether it's Search Funder, whether it's podcasts like this. Everyone is so open with their time. So if you think this is something you might be interested in, but you're not quite ready to make the leap or do it as quickly as I did, I was very clear this is something I'd wanted to do for a while. So although the search phase may seem quick, this is multiple years worth of thought process. And if you're going to do it and you decide you're going to do it, I would say start taking the steps. Some great resources in terms of materials and books and the community. And there's other avenues if you want to understand whether this is interesting for you. I was talking to someone in the community who's gone to work for a searcher, running the business, and is now helping them on their second acquisition. So there's all those different types of opportunities to get into this space without necessarily, with the economic environment as it is, some people might find that too risky. And I think that's just on an individual by individual basis. Yeah,
to kind of feel it out before you take the leap. Yeah, that's really good advice. Just one more question. And we ask this to everyone that we have on the podcast. And it's not an easy one. Who has taught you the most in your journey? And that could be search, it could be generally in life, in business.
That is a tricky one. I'm going to answer it, and I don't know if people have said just one person. I think there have been a few people in the search community, Amir, who I mentioned at the start, who basically gave me that initial push in, and then the wider community taught me a lot about deal structure type, how you position yourself, and then embedding within the wider network. I mean, I work very closely with Will from GE and the GE team and Brian from Fox Williams. Again, they probably didn't realize they were teaching me a lot, but they were teaching me like every time I got on the phone with them, and they helped me through the process, which was really, really helpful as you're going through it, because I've been involved in M&A type activity in my previous career, but this is like different, like completely different, particularly when you're putting skin in the game. And then since acquiring the business, I think tapping into that entrepreneurial spirit within the family and having people go on this journey with you. So my mum, my dad, my brother, who's also an entrepreneur, having that network around you where you're having a stressful day and you are the person at the top now, so you can't encumber the team with that at times. And having those people who say, this is just normal. If you weren't a bit scared, it would be weird. And then giving you that advice and going on the journey with you. So that type of kind of ongoing teaching has been really, really helpful for me personally. So I would say, if you could have those people around you, whether you're family or friends, definitely think about that as you embark on this, if you're thinking of doing it.
Excellent. Perfect. Well, that's really helpful. Toby, it's been great fun having you on. I think there's been some really useful information in there. Thank you very much. And hopefully we'll have you on again in the future where we can talk about, all the things that you've done since acquiring. Don't forget to follow us on Instagram at Found and Funded Pod and LinkedIn at The Found and Funded Podcast, and comment on who you'd like to see us sit down with next. If you have any questions about what we've discussed today, drop me a message and let's have a chat.